Hello, in this video I'll be sharing with you how you can trade the commodity channel index divergence. What is commodity channel index divergence? The commodity channel index divergence is the indicator you are seeing on my screen, and you can see the parameters of the indicator. The period is 14. You are applying it to typical price, high, low, close 3, and you can see the levels, and here is exactly everything it is. Then you click on save. This other indicator you are seeing is my relative strength index, and of course here are the level of the relative strength index. We have 20, 80, 90, 10 and 50 respectively, and of course here is our time frame. So this is exactly how this works. So if you've done your setting correctly, your chart will be looking exactly like mine. So let's go into exploring what this indicator is all about. You can see this is the commodity channel index, the black line you are seeing. And it is important for you to know that the essence of this commodity channel index is not to determine overbought or oversold. I am not saying when it is at 80, 90 is an overbought, or when it is at 20, 10 is oversold. That is not the purpose of this indicator. This indicator is specially applied in order for you to determine your divergence, and that is exactly what I'll be explaining for you in this video. Is for you to know how reliable this commodity channel index indicator is when it comes to getting a sniper entry confirmation. Now that you have done your setting, let's take a look at this. Then we'll go into the application of this indicator. Now, what is divergence? Every divergence trade you will be taking will be in the direction of the market. So divergence basically is all about the behavior of the price action on the main chart compared to the behavior of your indicator. It simply means that you are comparing the behavior of all of this price action on your chart against what is happening on your indicator window. For instance, in an uptrend, if price is making higher high, higher low, higher high, higher low, it is also expected that this indicator will be making higher high, higher low, higher high, higher low. This means that there is an agreement between the price action on the main chart and the indicator window. But in a case where we have a divergence, is when we are having price giving us higher high, higher low, higher high, higher low, and the indicator is going higher high, higher low at a time, and then subsequently begins to do the opposite. So when the indicator is doing the opposite of what the main chart is doing, is what we refer to as divergence. Okay, so having established that, now how effective is the divergence? Divergence is only effective if it is in the direction of the trend, which simply means that you are not using this divergence to anticipate reversal. You are only using divergence for trade continuation. For instance, if we are in an uptrend, price make a higher high, higher low, higher high, right? So as price is coming to make a new higher low, we already know that if our point of interest is here, we are expecting price to come in here so that we can buy. So we are our goal is for us to see price action here and then see a similar divergence that will agree with us on the condition of buying, telling us that we have come to the end of this pullback and we are about to continue in the original direction of the trend. But we are not using divergence to say, for instance, this price has been bearish. price has been bearish over time considering what is happening on this market. This is a lower high, a lower low, another lower high, and we have a new lower low. So based on this event happening right now, we are in a downtrend. So it will be wrong for you to see a divergence and begin to anticipate that price will begin to buy. Rather, we are going to use this divergence to confirm that price is pulling back. They will need a divergence to confirm that we have come to the end of this pullback and then sell to the downside. That is the effective way, and that is exactly what we want to see, and that is how we can get a sniper entry trading this divergence. Remember, it all begins by first you determining the dominant trend of the market. And again, please, I want to admonish, anytime you can't identify a proper trend of the market, it is important that you move to another asset. You can see that we have so many pairs when it comes to trading. We are not limited to a particular pairs. You can trade volatility, you can trade boom and cry, you can trade currency pair. You have so many assets to trade on. So you don't need to limit yourself to a particular pair, right? So if you don't have a clear price direction, a clear trend on a particular pair, you look for another pair that will make things to be very clear for you. Now, remember, you are not the only trader in the market. What that simply means is that since you are not the only one trading, you can't force price to move in your own way. You are not the market maker, so you can't force price in any terms. The price you must sell when the dominant trend is bullish. So you must work with the trend. And if you must work with the trend, it simply means that you need a clarity. You need to move where every other person are moving. Another thing is, let your levels be obvious. It shouldn't be what you are contemplating about. That is why so many of our zones fail. It is area most of contemplation you are contemplating. Is this area valid? Is this area not valid? Now let me illustrate something for you. If you look at this price movement carefully, you realize that in this movement, in this particular price movement, sorry, I'm trying to bring up the chart, so let me illustrate this properly. Now you realize that, look at this price movement. Here price gave us a movement to the upside. It gave us a higher low and create a new higher high. So now we have a break of structure here, which is this movement to the downside. So automatically this trend has been compromised. So we are no longer in an uptrend, but in a downtrend. So we will look for our point of interest inside of this movement. That is where we are looking for our point of interest. So what is our point of interest? We are looking for order block, or a smart money cube, or an imbalance. So if we mark this out carefully, you realize that this is actually an order block, right? Now that we have marked this order block, you can go ahead to bring up your Fibonacci to identify whether it is at your premium or your discount zone. But for this video, I will not be doing all of that. But look at what exactly I want to show you. Now price has come down, and then this is our order block that we have marked, our OB, which signifies order block. Now look at what happened. Price pulled back into this order block. Now that price has come into this order block, we have already established that this is a beginning of a downtrend, right? And price is in our order block. So once price come to your order block, the next thing you need to look out for is divergence. Now this order block you are seeing here, this price movement here, is what you are seeing on your indicator window here. Now I have already seen a divergence, but if you are seeing it for the first time, you can move to your lower time frame, let's say 15 minutes, and let us look at this together on a 15-minute time frame. Alright, so now look at this point. Price has returned back. Now let me identify this divergence that we are talking about. You can see this. Look at what is happening here. Price is obviously going high, right, from this connection. Now I will connect this on my indicator window and I want you to see. So now you can see the difference, that this one is going high, this one is slant to the downside. So now that is the divergence we are talking about. There is a disagreement between the indicator window and the main chart. Instead of having higher high, now we are having a lower high. So which shows that there is this disagreement. And because this disagreement is happening inside our point of interest, which is an order block, and we were looking for a selling opportunity. So immediately we get this now, and then we get this shift candle, we now sell, and then you can see how it plays out massively. So this is exactly how you can do this. This is exactly how it works. So you can see that, and then you see that play to the downside. Then again, we have this down that has played out. We will now look for another new order block based on this range. You have watched our previous video, so we expect that you know what range is all about. So we won't be talking much on that. So now we are going to mark our new range, and here is our new range. You can see that. So the order block I just marked now is the order block here, which make this move that we just had the first time. So that is our new range, and then we'll repeat the same thing. Looking at this even on this 1 hour time frame, look at, there is a divergence when price pulled back into that zone. You can see that divergence and how smart that divergence is. Let's look at it on a 15-minute time frame. You can see it. Even on this 15-minute time frame, there is a divergence. If you look at this carefully, you'll see that this one is higher than this previous one, and then look at this one, it is higher than this. So you will realize that this CCI is not touching 90, but this one is above 90, right? And you can see that this is not touching the trend line and this is touching the trend line. So that is exactly how you can take advantage of this. It is very, very effective combining the CCI with this particular trading strategy. Now let's look at the recent move that just happened. This is our order block that pushed price all the way to this downside, and then of course you can see that. Now on this order block, you can see that movement. Now look at what happened. Price pull all the way into this zone. You can see the push of that price. So do we have divergence on this one? Let's look at our 15 minutes before the reversal. No, we don't have divergence on this. So it is not in every case that we have divergence, but in most cases, anytime you get divergence in the direction of the trend, it plays out 80 to 90%, which means that you can capitalize on any of this. For instance, if you have marked a support and resistance zone, let's say here now is your resistance zone or your support zone if it is on the downside, and price pulls towards it and gave you a divergence and it's in line with the trend, it can become your entry. Look at this particular trade. You realize that this is a trend line. Price touches here, touches here, touches here, and again is coming to touch another time. So we can capitalize to take this trade, So we have all of these confluences of confirmation. But most importantly, what we are saying about in this video is about divergence. And I believe you have gotten value from this video and how you can apply your order block to get a reliable sniper entry confirmation. I want to hear your thoughts. I want to hear your opinion after backtesting in the comments of this video. And of course, if you are interested in enrolling for a mentorship course, there is a link in the description of this video that will lead you to the Telegram group where you can make your inquiry on the necessary step that you need to take. See you in the subsequent video.